Arnab, thank you for inviting me. Everybody loves money. Everybody wants to be a billionaire. It's good to have a lot of money, and we should have ambitions to make obscene amount of money. So valuations become important. Valuation is what people pay you for buying your stock. Value creation is what you do to create a sustainable business. And throughout history, valuation and value creation has moved in cycles. When there is greed, valuation goes up. We believe growth is going to be a one-way street all the way up, like inflation in the United States. But when greed becomes too large, and like Rockefeller said, even the shoe shine person opposite Wall Street was talking about stocks, fear comes in. And then people start selling, and valuation disappears. So we go through these cycles. And these cycles are part of the capitalistic economy of creative destruction. It's like the Tandava dance of Shiva. Creation, sustenance, destruction. So, greed and fear rule the markets. Human emotions rule the markets. And it's happened throughout. When the going is good, raise capital, keep the money in the bank, look at it every single day, worship it, because the market comes down, you'll have cash to spend. You know, Arnab, I remember in 2000, Infosys was valued at 55 times sale, 200 times EPS, 50,000 crores for a revenue of about maybe 400 crores, as whatever it is, small. And the next 4 years, we increased our EPS by 43% a year. Market value came down from 50,000 crores to 35,000 crores. So all these declines in the market for Paytm and all, we've seen it much bigger, much before. If somebody says my valuation is 30 times sales, you just laugh at them and say, okay, it happens. So there is this cycle that goes on, and I think we got to be very cognizant about that and build sustainable businesses. So I want to say it is part of the capitalist economy, and we got to keep quiet. Now, how do you build a sustainable business? You build a sustainable business by creating products or services which people want, are payable to pay you a price, and people need. And this has to continue by relentless execution day in and day out. Entrepreneurship is a 24/7-hour job for everybody. There's no work-life balance in entrepreneurship. It's just work, because life is your work, like you do, Arnab. Every day, every single minute, like Suhail does, like the great man Sanjeev does. Every single minute is work. And work is life. It involves a lot of sacrifice. It involves creating value in future by sacrificing today. And you enjoy the benefits for a period of time, and it takes time. Anything that goes up fast comes down fast too. When the Nasdaq boom happened, Infosys valuation went up by $25 billion in 2 weeks and came down by $15 billion in 1 week. We never knew why it went up. We never knew why it came down. It was nice going up. While coming down, well, you felt a little bit surprised. So, that is the second one. So, build a sustainable business. Next thing is, raise capital when money is available. Don't look a gift horse in the mouth. When people are going and giving you money, raise the money. Get whatever valuation you want. But remember one thing, equity is very expensive. Equity holders want 20-25%. Banks only want 8-9%, right? They're very cheap. Except if you buy an apartment and go away somewhere to London or somewhere. So it's very difficult. But it's expensive, and investors want return on what you buy. If you are valued at 10 billion and raise $1 billion capital, they want 25% compound in the next few years. That's their expectation. And if you don't fulfill the expectation, the market will punish you. So you've got to be careful about how you value. And if you value, you must value at a point when the investors who come in see great value. If you're going for an IPO, we tell people, value at a lower point than what you're willing to pay. You know, Arnab, in 1999, when we did the Infosys listing on the Nasdaq, we had a book of $3.6 billion for $72 million of capital. We didn't need the money. The money is still in the bank. We never used the money. Listing was for strategic reasons. And the book was around $37. And we fought with the big banks like Goldman Sachs to say, we don't want 37, give us 34. They were shocked. Nobody has argued with us to say that we don't want the best price. We said, look, we are diluting 3% of the stock. We want the investors to come in to make money. We want them to make money because we don't want to destroy the 97% for the sake of the 3%. If you price it high and the market falls, 97% are going to lose. If you're diluting 10%, you've got to take care of the 90%, not squeeze the 10%. You take more money from the 10%, the 90% will lose. All these guys who have gone to the market, very proud boys who think they're the cash whiskers, they've seen the stock price fall down 60, 70%. They destroy the value of the existing investors for the small amount of greed and to be heroes on a particular day to go price going up. So price is something that you've got to be very careful because the price has to be sustainable. And when you take money from the public, you have a fiduciary agent. You work for everybody, not for yourself. You have to work for the small investor, every single person, because you have taken their public money. I was in a FICCI event where a lot of industrialists are there. And as a SEBI committee member, we brought in majority of the minority for voting for related party transaction. Everybody came on stage and said, I own 60% of the company. Who is this person to tell me majority of the minority? Then the chairman told me to meet, to come and talk. And I said, look, if you take 1 paisa from the public, you are a fiduciary agent and they have a right, not you. You are not the owner of your company. You are a fiduciary agent and take care of them. So when you take money from investors, you must make sure they raise money. And I think that's extremely important. And then make sure that you have respect for capital. Somebody has given you money to invest, not to blow it up, to buy cars, or to go for a holiday and give bikes to all kind of people because money is not going to be endless. Have respect for capital. Be frugal in the use of capital. Because capital multiplies if you're frugal. And if you're frugal, you'll get outsized rewards. And the money is not going to last ever. You know, I remember one day, Arnab, Narayana Murthy came to my room and said, Mohan, I went to a meeting where people said that, there's something called loans and advance in the balance sheet. And what is they hide something there. What are you doing? Then he told me, how much cash do you have in your account? Bank balance. I said, about 30,000 crores. I said, do you really have that money? I said, why are you asking? Parmalat, an Italian company, had just now had $1.5 billion of capital. It was a fraudulent capital because there's no bank deposit. They had printed the certificate. Then I told him, are you in town in another 2 days? He said, yes. I'll go to the bank, withdraw all the cash, and you and I will sit and count. So I'm just telling you this story is to say that you have to respect capital. You've got to be frugal because it'll increase. And then I'll just end by 2 or 3 more points. The world printed $25 trillion of money, particularly OECD and the United States and UK, to take over the global financial crisis and COVID. The printed money is a $90 trillion global economy. The money will not wear off. So there was zero interest rates for about 20 trillion of the 40 trillion bonds of the OECD. Now, of course, we are paying the price for it. So the splash of liquidity bought in more unicorns, and that's what gave people this exuberance, and they forgot about valuation. So in the public markets, valuation goes up, driven by flows of money, driven by greed, driven by optimism. Valuation falls, value creation comes, and slowly value creation meets valuation, and the market cycle starts all over again. In public market, it's 36 months, private market, maybe 16 months. It happens all the time. It's going to happen tomorrow, it's going to happen day after, and it's going to be a continuing thing. But today we are surplus in capital, and we are in the midst of a global inflection. So I want to say very clearly that India is in a great cycle for startups. We have raised $112 billion of money in the last, from 2014 to 2021. 2021, we got $42 billion of capital coming in. This year, we'll have FDI of $100 billion. And this year, we had 18 unicorns. Last year, we had unicorns almost every week. Almost every person wanted to be a unicorn, and money was pouring in. Take the money and have fun. But keep the money in the bank and don't blow it up. And we had 108 unicorns today. By 2025, we'll have 250 unicorns. And this year, we already got about $19 billion of capital. We could end with $22 billion of capital, maybe 20 unicorns. And hopefully next year will be better. So I want to end by saying, look after value creation. Value creation is sustainable. Valuation is the glamour. Glamour in business is the first 2 minutes. The balance is all about execution, execution, execution. Like you, Arnab, you can come here and talk about your EBITDA, your number of eyeballs, people doing thalis, but you got to have a show every day, 3 hours of shows. And you got to work 10 hours for the 3 hours of shows. And those eyeballs are not secure. They may go away tomorrow because you're not exciting anymore. You're not having those things that are interesting to people. So value creation is something that's sustainable, that creates loyalty, that creates a moat, and that creates something that can go on. Valuation is the time of the moment that goes up and down. Don't get enthused by valuation. Look at it and be happy, but make sure you keep the cash in the bank and create value. Thank you very much.
Thank you very much, Mr. Pai, for that engaging talk on value and valuation. Ladies and gentlemen, the people who earlier looked at India as a developing country are now looking to invest in the emerging superpower. We are the fastest growing economy and have put ourselves on the list of the largest economies of the world. Now it's time for us to lead them all. It's time to bring the world to India. As investors are moving out of China, India is their preferred destination. The government is bullish on FDI inflows, and so is India Inc. Our next panel, Mission Superpower, Investing in New India, talks about